So this is an extract from the BHP website. Just to tell you a little bit about BHP, first of all, we have 5 offices in the north of England, over 30 partners and approximately 400 staff. So we're a pretty large firm, and by and large we can offer anything you could possibly want from an accountant. So within BHP we have a large healthcare department, approximately 30 staff that work full-time within our team. There are 2 of us that head up the department. There's myself, you can see our mugshots there from these, so this is another extract from our website. You can see my mugshot there, and also my partner Colin Hall. So we look after 95 GP practices at the moment, but we also have pharmacy clients, GP federations, providing a lot of advice on primary care networks at the moment. We also look after 140 dentists as well. So on the primary care front, we are founder members of ASMA. So ASMA is the Association of Independent Specialist Medical Accountants. So we're members of there. We're also members of Creston, which is a group of chartered accountants within the UK, and we head up the healthcare department, the healthcare what's it called? The healthcare team, if you like, within Creston. So that's background to me and BHP. So just to get on to what we're going to cover today. So as Damien said, I did a finance session a few weeks ago at St Helens. It was a 3-hour session. We had nearly 50 people there. It's quite interactive. It does always help when you get questions. We've not got 3 hours today. I'm sure I'd bore you to death with 3 hours on a webinar. So we've got a bit of a slimmed down version. So what I'm going to be talking about is, firstly, a look at practice profitability. So how do you know how well you're doing? And also just run through a few things that you could look at to try and improve the profitability of your practice. We'll also have a look at cash flow. So it's no good making good profits if you run out of cash. That could be the end of the practice if that happens. So quick chat about cash flow. Also a look at risks to your practice, financial risks really we're concentrating on here, and what could cause you problems. And then a few top tips for your accounting year end. And then finally, a quick look at cloud accounting. So the revenue would like to bring us all kicking and screaming into the 21st century. So making tax digital is their way of trying to do this. So we'll cover that right at the end. So just moving on to practice profitability first of all. How do you know how well you're doing? Well, the best way to find out is to benchmark your results against other practices. And this is what we do for our clients at BHP. So we have, as I mentioned earlier, 95 GP practices that we act for, and each year at the accounts meeting, we will benchmark their figures against our averages. So we split them between GMS and PMS, so we do them separately. Because of the contract reviews some time ago, the profits are now getting closer, but there is still a bit of a difference. So we do keep them separate. But just to give you an idea of where the averages are at the moment, for a GMS practice, an average 8-session partner would be expected to earn £130,000 based on our figures. That equates to roughly 16,000 per session. And a PMS practice, we're currently on 140,000 profit for an averaged 8-session partner. So that's around about £17,500 per session. Now those figures are directly equivalent to a salaried GP. So if you think of what you're currently paying a salaried GP, it's probably around £9,000 or £10,000. So there's quite a significant increase on a salaried GP's earnings. And it's important that new partners are aware of this. I know not every practice will earn at this level. There's a big variation across our practices. But I think new partners, we struggle to get new partners in general. And I think the majority of them aren't really aware of the earnings that they can potentially make by being a partner. And in fact, on our average figures, a new partner would earn over their career £1 million more than being a salaried GP. And I think it's important that new partners are put in front of accountants so they can explain this to them. Hopefully then you might have more success recruiting your new partners. So I mentioned our average figures are for an 8-session partner. They're becoming few and far between now, 8-session partners. Actually, occasionally we see a nine partner practice. 6 sessions is becoming increasingly common. The average is about 7 at the moment, but it is a falling number. And of course, I'm sure we all know the reasons for that. A lot of our partners are burnt out with the volume of the work, feel they need to reduce the sessions. But the other thing that's affecting that is tax on pensions. A lot of our partners have built up quite large pension pots, and new rules that were introduced recently have, of course, some of our higher earners to have additional tax charges on the growth in their pension during the year. So the other thing we do on benchmarking is, I mentioned we were a member of Creston, and each year we produce an annual report. It's an annual benchmarking report, and if you subscribe to Primary Care Direct, you can access that benchmarking report on our website. If you don't, please do. But if you'd like a copy of the benchmarking report, if you contact me directly, my contact details will be at the end of the slides. So just thinking about profitability and what we might be able to do to try and improve our current position, I suppose the biggest part of that is the income that we receive from NHS England. So our largest portion of income is the contract itself. So we receive around £90 per patient at the moment. And of course, that is driven by the patient numbers. I realise that not every practice will want to increase their patient numbers. Some of you will say, oh, we've got enough already and we can't cope with those. But that is the absolute key to increasing your income. To do that, of course, we have to have happy patients. It also helps if you've got new housing developments or whatever nearby that will give you more patients. But generally it's sort of word of mouth and people being happy that increases your patient numbers. What sometimes happens with our new clients is when they have a new build, they tend to see an increase in patient numbers. I'm not for a minute suggesting that you build a new surgery to increase your patient numbers, but it certainly does help. So enhanced services is another big area for us. Historically, within enhanced services, there have been different pots of income in there, which, to be honest, have been difficult to access. Some people not sort of ticking every box and not being able to get their income, which has been quite frustrating. And a lot of the pots of money that were included in enhanced services previously have now been recycled and included in your contract. So things like the unplanned admissions was a large one just recently that's now included in your contract. When we're thinking about enhanced services, it is important to think about the profitability. So don't just chase the top line, don't just chase the income. Think about the costs of delivering that service and whether that's going to be profitable for you. I know a lot of my clients with care home income will say, we don't make any money from it, but we have to do it. And I suppose that's a different conversation, really. But where you've got a choice, do think about the profitability. QOF is the next one. Most of our practices achieve 95% of the points or more for QOF. So in general, we're not having a problem with the QOF income. Some of our practices will use consultants to help them increase their income. They usually pay sort of around about £3,000 for that service. So that's something that you could look at if you feel you're not achieving the points that you'd like to. Prescribing income is the profit, well, it's the income that we receive on drugs where we write a prescription. And again, on this, it's important to understand the profit that you're making from prescribing income. So we need to compare the income against the cost of the drugs that we're purchasing to give you a profit. So normally that profit as a percentage of your income, we would expect to be around 1/3. But we do have a huge variation in profit percentages across our clients. Some are higher than that and some are considerably lower. So it's important here that you make sure that you're claiming all your prescribing fee income on your FP34s, and also that you're getting the best deal that you can on your drugs. So just moving on, the other thing that does affect the profitability of practices is whether or not they own the surgery premises. So every practice will receive rent from the NHS. If they own the premises, then the partners will keep that income. So that has a big effect on the figures and the profitability. Obviously, where you rent the premises, any rent coming in from NHS England will go straight out to the landlord. Again, a lot of new partners or potential new partners do have a reluctance to buy into new property. But again, it's really important that they understand the figures. The return on GP premises on average is around 7.5% where people own GP premises, and you'd really struggle to get anything like that having your money in the bank. So it is a good return, but it does tend to be a long-term investment. So you don't really see the additional cash as you're working in the practice, because your cash will go to pay off the money that you borrow to buy the premises. So it is a long-term investment, but a very good return. Again, important to get any potential new partners in front of your accountant to try and explain these figures. I think one of the other things that new partners tend to be wary of is the potential fall in value of surgery premises if the GP practice wasn't a GP practice anymore. And what is the underlying value? Values tend to be driven by the rent received from the NHS. So a practice in perhaps an inner city area would have a vastly reduced value if they weren't a GP practice. So that's a worry for new partners. But what I would say is if the practice is stable that shouldn't really be a concern. It's where practices start to have issues with profitability, cash flow, that potentially becomes a problem. So on to other forms of income. These do vary, again, enormously from practice to practice, but our high earners will tend to have a lot of income in this sort of area. Cash fees are things like medical reports, insurance reports, cremation fees. We have seen a fall in cash fees over recent times due to GDPR. So my understanding is you can no longer charge for copies of records. I think a lot of our clients are saying that they won't post out the copies of records. They will only provide them for collection, which I believe you're perfectly entitled to say. Other appointments I've mentioned as well. Partners will sometimes do other things besides their normal clinical sessions, so CCG appointments, for example, coming into the practice. Put service charges there as well. If you do have any spare room within your practice, that can be rented out, sometimes to health visitors, that sort of thing. It's important there that you're not seen to be charging a rent, because that can affect the notional rent that you receive from the NHS. So what we need to be doing is recharging expenses, so light and heat expenses and that sort of thing, rather than actually charging a rent. Other things that I've not listed on there that you may be doing is student training, possibly. Some of my clients do occupational medicals, HGV medicals, for example, and some people have other contracts separate from their core contract. So one of our higher earners has a musculoskeletal contract that brings them quite a lot of earnings. So it's good to look around, see what else you can do, as well as your core work. Expenses. Are there any no questions so far, Damien?
Not yet, Jenny. No. Everybody captured.
Okay, feel free to ask as we go along if you'd like to. Yeah. So on to expenses. The main expense of any GP practice will be your salary bill. So normally around 2/3 of your total expenditure will go on your salaries. It's also important to remember when you're taking on new staff, don't just think about their gross salary, because we also have to add on to that employers' national insurance, which is another 13.8%, and at the moment we're paying another 14.38% on pension. So roughly there's another 28% that we're adding to that gross salary cost. I say at the moment it's 14.38 because the employer's pension rate has actually gone up to 20.68%. But in the current year, the NHS is funding that directly. From 2021, so from next year, it's expected that we will have to pay that employer's pension costs ourselves, and the NHS have promised to fund that. So what I would expect is that we'll get an increase in the price per patient, and so an increase in the contract payments that we receive to cover that cost. And this is often the way that this sort of thing is funded. But what I would say is, if it's done that way, there are bound to be winners and losers in that. So it would be good to start thinking about if we've got to move from 14.38% pension to 20.68%, how much additional expenditure have you got there? And then we can be ready to compare that to our additional income when the NHS decide how they're going to fund this. It is important with your staff costs to have a budget and try and stick to that. Often when we're busy, we end up paying a lot of overtime and it's just trying to monitor that as you go through the year. Pension salary GPs there, again, the same applies to them with additional employers' national insurance and additional pension costs as well. Often we're paying their defence costs as well, so MDU or MPS, but of course with the recent state-backed indemnity scheme, those should now be coming down significantly. Deputising costs that's purely your out of hours deduction from your contract, so that's a standard sum. There's not a lot that we can do about that, and it's quite good value for what we get for it. Locum fees is a biggie, and often we find when practices profitability has dropped, it's because of locum fees, and I have to say it's sometimes a bit of a surprise to some at the accounts meeting when they see the volume of locum fees that they've incurred during the year. And I think often practice managers can be under pressure from the partners to bring locums in to cover sessions, and I don't think the partners sometimes really realise how much it's costing them till they get to the annual accounts at the end of the year. So do monitor your locum fee costs as you go through the year. Make sure, particularly if partners are pressing you to get locums, make sure that they know how much you're spending through the year, because ultimately it will affect the drawings. Drugs and medical expenses we've touched on already. So within there we'll have the cost of any drugs, of course, which you use to earn your prescribing fee income effectively, but there'll also be other consumable expenses as well. Again, the consumables, so things like I don't know, gloves, couch rolls, that sort of thing. They do vary from practice to practice. They also vary from year to year. So sometimes practices stock up. I have heard practices say when certain staff have gone, suddenly the cost of the consumables seem to go down. So yeah, worth monitoring, I think, if you've got particularly high expenditure.
Jenny, could I just interject? We've got one question regarding locum fees from Jim.
Yes.
Does VAT apply?
Does
VAT
VAT apply to locum fees?
I think so, yeah.
No VAT on locum fees. So usually they're providing a healthcare service which isn't VATable. I think there is a slight question mark at the moment over VAT, over locums working through limited companies, and whether that limited company is providing staff or providing healthcare services. I think we'd argue strongly for healthcare services. So if they were providing staff, then that would potentially be a VATable expense.
Thanks.
Okay. So premises costs, this will include things like your light and heat costs, your insurance costs, any repairs, cleaning costs as well. So most of our practices have contract cleaners. They are quite expensive, to be honest with you. Most of them tell me that that's a requirement of the of CQC, but worth looking at your cleaning costs, I think, and also ongoing monitoring of your light and heat and insurance costs, just as you would at home, really. We also have within premises costs for people who own lift buildings, we have service charges, and I know there's certainly been a lot of issues for clients over recent years over the size of the service charges and also not getting full information. And personally, I would be reluctant to pay for any bill for service charges if I didn't know how it was made up and I was happy with the cost. And certainly a lot of our clients have not actually paid for their service charges for 2 or 3 years because they've not been given accurate information of how the bills are made up. The only comment I'd make on that is if you know that you owe a large amount of service charges, make sure that you have the money set aside to cover that bill when you do finally agree what the charge should be. Admin costs will include things like, so routine things like telephone, printing, postage and stationery. Again, important to monitor these costs. I've had a lot of clients recently changing their telephone contracts and getting a better deal. We also see an awful lot of expenditure on toners, so just monitoring that sort of thing, and your stationery and your photocopying charges as well. Subscriptions we also include within the admin costs, but of course now we've got the state back scheme, as I mentioned earlier, we should be seeing those costs come down. I think most of our partners are seeing costs of less than £1,000 per partner, so that's good news.
Jenny, I've got another question. Lorraine's asking for some advice. I'll quote the question verbatim. Lorraine says, I've not paid any service charge for 4 years either. We now owe over £100,000. If the
sorry, just breaking up a little, is it £100,000?
£100,000, yeah.
Yeah.
If the CHP can't provide the backup to the invoices, what would you recommend that we do?
Not pay them, basically. I mean, you know, it's ridiculous that that they can't provide the information. I mean, you need to know what it is you're paying for. So I would just dig your heels in, but really do make sure you have got that money to pay when you finally agree the bill. I'm not sure how much help that is, but it is down to CHP to provide the information.
If you have any more questions, just type them up and I'll ask Jenny again as well. Thanks, Jenny. Okay.
So other things within admin expenses, not an awful lot more to say. Sundry expenses is always an interesting one for us. We have all sorts of things within there. I think my partner, who's not here at the moment, but Colin, he had a client who years ago had large expense in admin expenses for a horse and cart for a retiring partner. So I think that was back in the days when the partners were earning more than they are now. So we don't often see that sort of thing. But just so on expenses, it's generally keeping an eye on everything, but if there's one area to concentrate on, it's definitely the staff costs. Finance charges I've not covered, so I'll just cover that now. So within finance charges, we get your general sort of bank charges and interest, but also in there may well be loan interest if the partners own the property. So if it's a partnership loan, we'd expect to see that interest cost in the practice. Loans aren't always held by the partnership. Sometimes they're personal loans, and then the charges wouldn't go through the practice. Usually the loans are cheaper if they are partnership loans and secured on the premises. What that does mean for partners is that they're then joint and severally liable for the other partner's loans as well. But when the rent comes into the practice and then the practice are paying off the loan directly from the rent, then that shouldn't be a problem really, and certainly a saving to be made. Some of our practices have Aviva loans still, so old Aviva loans where the interest rates are particularly high. They're stuck in there because of high redemption penalties. We have had some clients come out of those Aviva loans. The redemption penalties are tax relievable. So if you're a 40% taxpayer, effectively you're paying just 60% of the redemption penalty. For a lot of people, that's still a very big amount, but it does help. I have seen issues with new partners coming in because of these Aviva loans. And as I say, 1 or 2 practices have spoken to banks and they've been able to do something on that front. So the main banks we see in the healthcare arena at the moment are Lloyd and NatWest. It will vary from area to area, but they are the people who will understand about the Aviva loans and understand primary care. It is important, I have to say, that you are with the healthcare managers in those banks, not just any bank manager.
Jenny, could we rewind briefly just to the invoice issue, the CHP invoice issue?
Yes.
Next question, the follow-up question was, how long would you suggest that we wait for the backup info before we say it can be written off? The question asks, she thinks it's very unlikely that it'll get backup info for some of the years that are outstanding.
Yeah, but we've not paid, have we? We've not actually paid the bill. So in the accounts we'll have a creditor owing, so we'll have an amount owing to CHP. And to be honest, I would not suggest that we write that off, because CHP will still be entitled to the money. We just don't know how much. The difficulty is, I think, with this sort of thing is when you get retiring partners, and we've got a liability in the balance sheet, but we don't actually know ultimately how much we're going to have to pay. But I think that's sort of out of our control. I think we have to assume that what we've got on the invoice is the amount that we need to pay. And then if partners retire and the situation changes and perhaps we might find out that we owe less, then we'd need to then think about going back to that partner to give them their share of the saving. I think that's the only thing that we can do. I don't know how long CHP can go on not providing information, really. If they want their money, they're going to have to provide something, or just agree to a more reasonable amount if the charges are really high, which they usually are.
Okay. And another slightly separate issue. With regard to sundry costs, do they go under administration costs?
Yes, sundry would normally be within administration. Yes, yeah. So sundry is everything that you can't fit elsewhere, which is where the senior partner's horse and cart comes in, I suppose. Yeah. Okay. So income versus lifestyle. I think as accountants, we always concentrate on the money, on the profit. But of course, it's not all about the money. And increasingly, as new partners come in, I think the younger generation are more concerned about having a balance. They're very big on work-life balance. So if your profits are below average, that's not necessarily a bad thing. It's a personal decision. So if you want to work less, have more staff, and have a more comfortable life, then that's completely the partner's decision. No issue with that at all. So our averages are just averages. You don't need to be on the average to be happy. So on to risks. So possible risks for your practice, as I said earlier, great to be profitable, but if you run out of cash, that becomes a problem. So you should always be in a position where you have enough cash to pay whatever you owe when you need to pay it. In my experience, issues with cash flow are sometimes driven by high locum expenses, as I mentioned earlier, but they're also driven by the level of the partner's drawings. And I personally have had conversations with partners about falling profits and partners saying to me, but I can't have any more than X thousand pounds per month. That is the absolute minimum that I can take home. And of course, when you get that sort of attitude, then this is where you can run into problems. So I think it's keeping an eye on partners' drawings, and trying to be quite firm with your partners if we've got falling profits, that those drawings need to reduce. We tend to do, for some of our practices, the drawings calculations for them, and that's linked to a cash flow forecast, so that practice managers can just monitor the cash as they go through the year and be reasonably happy with the level of partners' drawings that they're paying. We've had issues recently with additional tax charges for partners on the pension. I mentioned that briefly earlier, but sometimes these can come out of the blue, and of course partners then look to the practice for additional drawings to pay for those tax charges. So important to have a plan for your drawings, and it be in line with the profitability that you're expecting for the current year. The other thing that's causing a lot of practices problems at the moment is PCSE and superannuation. So for some practices, they are not taking contributions. Some practices, they're refunding contributions when they should be taking them. There's lots of year-end adjustments. I think some of our practices go back to 15-16, where the year-end adjustments for superannuation have not been made. So they're causing us all sorts of problems. And again, it's important to be aware of how much you're expecting to pay out or receive when PCSE finally sort themselves out. I think what we're seeing at the moment is PCSE tend to be dealing with current stuff reasonably promptly, but the historical adjustments, they're still taking time to clear. So I'm hopeful that it will get better in time. Famous last words, perhaps. Put capacity there, and here I'm really talking about GP capacity. How many partners, salaried GPs you have to enable you to do the work. So one of the main risks we see with practices is not having enough GPs to look after their patients, and this can cause enormous problems, particularly because it increases the workload of the people that are there, and they then struggle. That can lead to falling standards, and because of that can lead to CQC coming in and perhaps giving a less than favourable review. And we have seen some practices then end up handing the contract back or losing the contract as a result of that. So I think succession planning for every practice is absolutely key. It's really important to look at your partner profile. What sort of age are your partners? When are you expecting them to retire? And having open conversations about that. Certainly at BHP, I mean, we've got over 30 partners, but every full partner meeting, succession planning is an issue that's on the table, and we're looking at what's the plan for people coming up to retirement, who is going to take over from them, to make sure that we can continue to look after our clients. And you should really be doing the same thing within your GP practice. This doesn't just apply to GPs, it also applies to you as practice managers and any other key staff as well. I've also added property there. I think really that's another risk where there are issues with the practice. If we end up handing the contract back, then potentially we have issues with falling property valuations if the if the GP practice was no longer operating from that property. So that can be an issue where partners own the property. So it does come back to planning. I know it's really difficult to get new partners at the moment, but I think I come back to discussions with the accountants, making sure that any potential new partners know what they can earn within your practice, and making sure that they know, they understand an investment in the property as well, and what they're likely to get out of that. It can help. I think certainly a lot of the the trainees who have just qualified, they I think they all jump on the bandwagon together of, oh no, we don't want to be partners, without really giving it proper consideration. So a few tips for your year end now. Just very briefly, just a few things that we as accountants sort of see regularly that could perhaps be improved on. I'm sure you're all marvellous at your year ends and provide your accountants with everything that they need, but I'll just quickly go through this list to see if anything strikes a chord. So I think the first thing is keep up to date with your accounting records, certainly monthly. Larger practices, I'd expect, probably ought to be writing the records up weekly, and that of course helps at the year end. When you get to the year end, you haven't got too much to catch up on. Balance the bank, so make sure your accounting records, all the payments and receipts in there agree to your bank account. Have a good filing system, so we don't really mind what filing system you have, but make sure your papers are in a logical order and referenced. If you use an online system like Xero, it's possible to embed copies of the documents within the software, which is really helpful. I'll come on and talk about Xero a little more in a bit. Include lots of details. So by that, I mean, if there's an expense that relates to a particular period, just make a note of what period it is. If it's an expense that relates to a particular partner that needs charging against that partner in the profit share, it's useful to know that as well. Review sundry headings. This is the dumping ground. Everything that we don't know what it is tends to go in the sundry. So just a review from time to time of what we've put in there. Do we now know what it is? Do we need to chase the details up from the supplier and find out what it is? Sense check your information. Things like, are there 12 payments during the year? Or have we only got 11, or are we missing one? So make sure everything within that within your records makes sense. Understand your journal postings. So often wages or your monthly contracting income will be posted by journal, and often we do see clients get this wrong. So if you're unsure, just ask your accountant. I'm sure they'll be very, very happy to help. Also include non-financial information as well. So for us, it's really useful to know what the patient numbers are at the end of the year, what your QOF points are, what your profit sharing ratios are during the year, any changes during the year, and also anything that's changed after the year end as well. So check all your paperwork is there. So make sure we've got 12 contract statements, 12 prescribing fee statements, for example. And also it's really helpful if you have an awareness of what's outstanding at the end of the year in terms of amounts that are owing to the practice and also amounts that are owing from the practice. So your accountant will look after the year end and be able to see any additional amounts coming in or going out. but if it's not actually happened after the year end, it can be missed if you don't make them aware. Include any additional information you feel is useful. So by that I mean, if you know that a cost has gone up, like your staff costs, for instance, if they've gone up a lot, your accountant will be interested to know why that is, and to make sure that the figures make sense. So, and any other expected movements in the figures would be useful. Software advice, I will come back to that. And finally, just ask questions through the year as well as at the year end. Your accountant's there to help you. And you know, it shouldn't be a once a year conversation with your accountant. Keep talking to them through the year if you're unsure about anything. So, final section, I've touched on this already really. I just wanted to talk a little bit about making tax digital. So making tax digital is the revenues way of trying to bring everybody kicking and screaming into the 21st century. So we've already got making tax digital for VAT in already. So that came in April 19. It'd be good to know if anybody is VAT registered, because if they're not, then this section doesn't actually apply. Don't know if you can, that's probably unrealistic to expect people to to tell us whether they're VAT registered. So I'll go through some of the detail of this. So anybody VAT registered should already be keeping records digitally and submitting a VAT return digitally as well. Also, if you are below the VAT threshold and don't have to VAT register, you can voluntarily opt to use the new Making Tax Digital system, so submitting things digitally. I suspect they've had very little take up on that. I'll move on from VAT because I suspect there's not that many people registered for VAT. Now, you can be exempt from Making Tax Digital if you can't use computers. Maybe because of where you live and you don't have a proper internet connection, or because of age or disability. Also, religious grounds as well might make you exempt as well. Also, if you're insolvent, I would hope that none of our GP practices would be insolvent. So, as far as income tax goes, I'm just going to move on to the previous one. As far as income tax goes, this was supposed to be brought in originally in April 19, and then they moved it to April 2020. They're now saying that it will be April 2021 at the earliest. So the idea is we'll need digital accounting records, and it will need to be cloud-based as well, because practices will need to quarterly submit their records to HMRC. And they'll have a month after the end of each quarter in which to do that. So those records don't need any sort of accountant's adjustments within them. They just need to go straight across to the revenue, and then there'll be a final year-end submission which will include all your accountant's adjustments. So for a March year-end, the final submission would be the following January, in line with the tax return deadline. So that's the plan. I don't think for a minute that the revenue are going to be doing anything with this information that we're going to be sending them at the moment, because they won't have the manpower to do it. But I think ultimately the plan will be that they'll be cross-checking your records with the records of the person that you're paying. So for example, if you were paying a locum perhaps, then they might equally look at the locum's records to make sure that they were declaring that income. So I think that's the ultimate plan, bit of a big brother exercise to try and keep an eye on us all. So in terms of software, I suspect a lot of you may be on Iris at the moment. Iris do an online cloud accounting version, which is called Iris Cashflow. As a firm, we prefer Xero. So Xero with an X, I've written it down on the slide there. The good thing about Xero is that you can have an automatic bank feed straight into your software from your online banking. So there's a huge amount of time saving within that, and it would really help with your monthly bank reconciliations and keeping your records up to date in a timely fashion. There's also quite a lot of reporting facility in there, so you'd be able to pull off your own profit and loss accounts to see how the practice is doing. Particularly if you produce budgets, you can compare to budgets as well. So this is coming in, as I say, 2021 at the earliest. I wouldn't suggest that you wait until 2021 to get on board with this. When you ought to be up and running and happy with it before we're actually required to do it. Most of our practices are now on Xero, and we find those that have gone on are happy with it. I do expect that when this comes in, there won't be instant penalties if you don't comply with the rules straight away. So usually we might expect a bit of a light touch from the revenue for, say, the first year to give people a chance to get up to speed. But it just makes sense for you to be familiar with a new system before the rules come in. So I think that's about it from me. We've got 5 minutes, Damien. If anybody's got any, I know we've asked questions as we've gone through, but if anybody's got any further questions, happy to take them.
There's no questions at this stage, but do feel free, anybody. We've got some negative feedback on cash flow, though. Not everybody likes it.
Nobody likes cash flow.
Somebody doesn't like it.
Right, doesn't. Oh, right. Okay, it'd be interesting to know why they don't like it. You mean they're having problems with it, possibly? We're probably not.
No, they've been very strong, and there are no further details. But they don't think they enjoyed the experience of using it. But
oh, for Iris Cashflow, you mean?
Iris Cashflow, yeah.
Right, okay, right, okay. Oh yeah, well, yeah, okay, yeah. I understand that because we took on a new client who had been converted to Iris Cashflow by their previous accountant. So we were using it where we prepared their first year's records, and we didn't like it either. We've now converted them to Xero, and they're happy with that. Enjoy using it. So yeah, it's been a good experience for them. So yes, I'm all for Xero.
That's good. But yeah, no more questions at the moment. Oh, let me see.
No more questions.
No, at this stage.
Okay.
The to all attendees, I will leave this the question and answer section open for another 10 minutes till 1:10. So if you do have any questions, do have a think, note them down, and then I can perhaps share them with Jenny afterwards if you don't have anything immediately in mind at the moment.
Okay. So just finally then, Damien, my details you can see on the screen at the moment. I think, are we sharing the slides afterwards?
We will do, yeah, and we've recorded the webinar as well, so that can be shared as well.
Okay, so final thing from me then is just to mention the next Practice Managers Programme session 2, which will be with Yearend Johnson on the Wednesday, the 4th of December. So that is from 1 till 4:30. So that will be in person. I'm not quite sure where that is, Damien. I don't know if we know yet.
I'm not sure at this stage, but I'm sure we'll be in touch.
So yeah, so that's session 2. So Thank you very much for listening.
Thanks, Jenny. Like I say, we've got 3 more minutes. No questions at the moment, but if anybody does have anything, do feel free. We'll hang around.
Okay.
Okay, I made that one. Thank you very much, everybody. Thanks very much, Jenny.
Thank you.
No more questions at this stage, but as mentioned, we'll be sharing the slides and we'll be sharing the recording, so everybody will have all of the contact details. So thank you very much. Jenny, I'll close this down now.
Okay.
Thanks, bye.
Thank you.